M.S Unnikrishnan, MD and CEO of Thermax, also joins in with his take on the business environment currently. Mr. Unnikrishnan, it's great to have you on the show. We need to talk about how capex plans will shape up into 2019, given that the main event risk influencing the course of decisions in the coming year would be the election event or the election risk, so to speak. You had earlier mentioned that you're cautious on receding private capex ahead of elections. What has been the on-the-ground impact on private capex in the current quarter?
Between the last quarter and the current quarter, the inquiry inflow has not reduced. In fact, it remains almost at the same rate, fresh inquiries from the market. Predominant part of this being from the private industry only. But medium ticket sizes are continuing. It is not only for the regular capacity building capital equipments, it is also from the construction equipment. It is also going on for textile machineries. It is also going on for machine tools. So we are seeing certainly the inquiry inflow in the private capex market remaining steady. However, there is a retardation in the level of finalization happening in the market, which we presumed was happening on account of the elections which is going to happen, because normally sentiments get into a frenzy level where elections do happen. Post the elections results declared yesterday, we need to be really careful about will there be further confusion in the market related to finalizing orders. However, the overall mood related to consumption and the capacity utilization is not taking any negative dip at this point of time. So I am quite hopeful the private capex can continue to be remaining positive, and I don't want to use the word buoyant at this point of time. I would rather say that it is remaining positive at this level. However, the government oriented, infrastructure oriented, larger ticket size capex may suffer, because the attention is going to be now focusing a lot more on how to win the election in 19 by both the sides of the political spectrum.
What has been the kind of capex from cement companies, steel companies? Has there been an uptick in spending?
Yeah, in the cement companies, I need to be admitting that there are a couple of greenfield and brownfield capacity building projects under negotiation. Similarly, the entire cement industry is going after the renewable purchase obligation they are coming under. So every cement factory who has not gone for a waste heat recovery based captive power generation is also having inquiry floated. Discussions are going on, and a couple of orders are getting concluded across the cement industry. I am quite hopeful since NCLT related takeovers are already over and there is nothing now left in capacities to be added. It will certainly be greenfield or brownfield projects happening. And since the construction industry has also started reviving post the setback in RERA, I am very hopeful that cement capacity addition is going to continue, and there is good action and traction happening in that particular market segment. And now coming to steel industry, I would say that we'll have to wait for consolidation based on IBC to continue for maybe a few more quarters. Though there are two major capexes ongoing, that is the Tata Steel Kalinganagar expansion and JSW Morbi expansion of fresh capacity of 6 million. We need to be waiting for at least a couple of more quarters or maybe a year for the fresh capacity addition in steel industry to happen. But I'm seeing a lot of activity in the sponge iron industry. A lot more capacities are getting created in the northeastern part of India for sponge iron.
Could you talk to us about the commodity prices volatility? And on that note, what guidance can you give us for the margins for the rest of the year?
Commodity prices have started weakening in the recent past, and the global demand for some of the commodities are not on an uptick at this point of time. So I'm not expecting a commodity price strengthening here afterwards. Minor weakening also can improve the chances for a margin stability. Margin improvement can only happen when the number of orders in the market are beyond the capacity of the current players to execute. Then you can be in a seller's market and demand a higher price, which is not going to happen for a couple of quarters more or maybe a couple of years more. My opinion is that across the industry, since there is a positive sentiments prevailing, price dropping by the market will not happen. So margin stability can be visualized going forward, but not margin improvement beyond a level. See, minor improvement at 25 basis point to maybe 150 basis point can happen across the board depending upon which level are you currently operating on. Those who are operating at a higher efficiency already, they can increase only by 25-30 basis points. But those who are inefficient at this point in time, they have an opening available for improving it by 150 basis points.
And what's the status of the Dahej Chemicals factory? What's the expected growth on that front? What is it that you are targeting?
See, Dahej is predominantly a resin, that is ion exchange resin manufacturing facility, and it has reached almost a 60% capacity utilization as of today. And our expectation is by Q1 next year, it will be reaching the peak capacity. And we have been able to match up with the capacity with the order intake, and we are getting good traction for picking orders from North America and Europe, which are better price realization markets for the country also. And the currency devaluation has certainly helped us in ensuring that our competitive edge for chemicals is improving in the global market. Second part of the chemical business of Thermax is on performance chemicals. Equally happy to say that we are able to find traction in the oil refineries as well as oil extraction industry, where we make very specialized oil field chemicals. And some of the largest names in the world are certainly looking at us as a possible vendor for them to supply oil field chemicals across the globe. So that also will find traction. So going forward, the chemical business of the company can witness double-digit growth on a consistent way going forward. And I'm very confident what will happen also.
Right. How is the response to foray into overseas markets like Southeast Asia, Africa and the Middle East?
Southeast Asia continues to be doing quite okay. I mean, an order intake in that market in the last quarter had been good. Current quarter also, I'm expecting that both products and project businesses should do reasonably well. Middle Eastern market is not very positive at this point of time, especially Saudi Arabia being the largest Middle Eastern market for equipments that our kind of company can supply. And the political instability that is prevailing over there is holding on to the investment cycle despite the oil prices going up to maybe a 60 and possibly remaining stable over there. But there is some amount of traction visible in Oman market, Kuwait market, but those are too small in size. So Middle Eastern market, I don't think can be a bet for anybody in the engineering sphere or even consumer sphere for some time to happen. Because unless Saudi Arabia comes back to a political stability, which I think is going to be taking a couple of more years for the world to be accepting the new dispensation, Saudi is settling down. It is not an investment destination for anybody. Unless people set up capacity, I mean, we are all, derived demand companies. Somebody else has got to commit money for creating capacity, which will take some time to happen in the Middle Eastern market. One isolated market also can be thought to, which is not in existence in the last cycle. We are seeing a lot of action happening in Egypt. Despite whatever may be the political issues, it's a very stable market. Money seems to be flowing into that market for creation of capacity. So we just opened an office there in Egypt, and we are looking forward to doing better business and that becoming a part of the Middle Eastern market in the calculation of engineering exports.
It was a pleasure chatting with you as always. Thanks so much for helping us understand what's going on at the company. What are the plans for growth going forward?